Hello, all. This is Javier Novoa with the Libertarian Investor, just with a little bit of an update. And I wanted to address some questions that have been coming out over the last week. It has been a wild week in the markets, guys, with oil prices fluctuating wildly, and our bets have panned out very well. It is, of course, the third week of this disastrous war that we're in. And of course, while I don't agree with what's happening, I would like to position myself to profit, to make as much money as I can from the chaos, and we're doing just that. And so, what I wanted to address today, first of all, was the question that the traditional ideas about how the markets work and how inflation works, especially as that relates to the price of gold and silver, has not been bearing out. That's what people have been saying. And the first thing that I have to say before I make any comments or any predictions is that, of course, this can all be wrong. This can all be incorrect. You know, in economics, we have a saying or a phrase. It's called ceteris paribus or ceteris paribus. And that means all things being equal. So any economic proposition that we make, it's all the other things being equal. Of course, what do economists know? The ceteris are never paribus. So as I say again and again on this channel, Austrian economists especially have taught us that because no one has perfect foresight or perfect knowledge, we can never make complete 100% predictions. But the irony is that as investors, it is our job to make predictions because we have to allocate our capital. We have to put our money where our mouth is. So all of this could be wrong. And this really ties into a story that was told to me years ago by a very great teacher of trading and investing. And he said, well, he was trading commodities, and I think it was soybean futures. And he was an avid student of the charts. You know, he did technical analysis and he did pretty well in that, but he had some big losses. And so I went to his boss, who was a very wealthy man. He was like the head of a commodities trading firm. And he said, look, the soybean, I think, was up a certain amount. And he said, look, according to this chart, soybean has to go up above this amount because it's reached this support level, this technical support level, supposedly. His boss proceeded to go on the phone and say, I want you to dump as much soybean futures as you can until that price goes down. And he hung up the phone. Then the price went down. He said the lesson is nothing ever has to happen. Even if you identify some technical factor, some cause, you think you've explained it, there can always be an exogenous factor that can come in there and screw up the result. Why am I saying this? Well, because despite these videos that we make, and these videos are just us trying to relate ourselves to the market, we have to be able to change our theories at a moment's notice, and we have to be flexible. And so what is the job of the trader really? Or the job of the investor? The job of the trader and the investor is to position himself so that he can survive to fight another day, because you can always be wrong. What you don't want is your mistakes to wipe you out. So you have to, of course, have strict financial controls. Talked about this in other videos. We'll continue to talk about it. You have to have levels, and you have to have stop losses. By the way, I put out a tweet on X today, and I was half joking, but it said that stop losses, and we're not going to use the word because perhaps YouTube doesn't want me to use the word, but I said stop losses are for losers. And of course, I don't mean that while trading you don't have a stop loss. That could and should be part of your overall strategy. But what I meant was, when you have a position like mine in silver that we're about to talk about, you don't put a stop loss. Why? Because I know where it's going to go eventually. Now, can I make a prediction as to the next 2 or 3 weeks? I can try, but there's no guarantee that I'm going to be able to do that. But what I can do is see the general trend based on my knowledge of economics, based on my knowledge of finance, and be able to say where this is going to go. So the first item that I want to touch on is the oil price. Now, it's been wildly fluctuating between $79 and $99. It almost went to 100 today. Now look at the oil price today, ladies and gentlemen. It's right now at 98.11. It keeps wanting to go to 100. And I think 100 right now is the resistance. And when it breaks through that line of 100, guys, get ready for it to go way up. Now, the Israelis today attacked the Caspian Sea, and I read they also attacked infrastructure in Qatar, and the Iranian diplomats were expelled from Qatar. That is when oil went steeply up from about 94 to almost 99. And my long-term bet, my long-term play on oil, and I'm doing it through USO, which is an ETF, and I'm doing it through Oxy, Occidental Petroleum, because Occidental Petroleum is a very solid company, and I know that it's going to track the price of oil, not as much as Chevron, but it's a lot cheaper than Chevron, or Exxon. It's going to track the price of oil, so that's where my bet is. Now, a lot of people have been saying this week, it's not going to go up to 100 again. I put to you that oil is going to go to $200 if, unfortunately, this conflict continues. That's going to spell bad news for the Republicans in the midterms. That is going to spell bad news for the economy. But I want to set myself up to make as much money as I can, no matter what happens. So that is the play, ladies and gentlemen, on oil. That's my response to the naysayers on that. Again, I've done pretty well in Oxy. It's up still about 6-7%, and it has a lot more to go up. I'm waiting for what it's going to do tomorrow morning. I am not selling that. I'm just holding on to that. I have done some options plays. I don't recommend everyone does options plays on this, but you can make a lot of money. I'm ahead there, and I have a feeling that we're going to be very successful in Occidental Petroleum. Unfortunately, because of what's happening, again, we're watching what's happening very closely. I still have some lingering hope that perhaps rational minds will prevail and we may be able to pull out of this, but I don't know. And again, if we're not able to pull out of this, not only are oil prices going to go up, but gold and silver are going to shoot up. And I've seen several people on X saying, well, gold is not going up and gold is supposed to be a hedge against inflation. And we see inflation in oil prices. The first mistake here is that people are conflating rising prices with inflation. Oil prices going up is not inflation. Inflation, as the Austrian economists teach us, is the actual printing of money. When the government puts money into the economy, that is inflation. And that is happening at a rapid rate. Of course, the Fed today is a little bit hawkish, and so that's good for the dollar. But eventually, if we continue this conflict, which has already cost us almost $24 billion, and we're just 3 weeks in, inflation is going to have to spiral out of control. And when that happens, ladies and gentlemen, that is when gold and silver are going to go up. So you have incredible prices today for gold and silver. It may go down more. And I put out a tweet earlier today. I said, take it to zero. I am not selling my gold or silver. In fact, I'm buying more. I want to wait until it consolidates a little bit before I buy more. It could fall to 70. It could fall to 65. I'm talking about the silver price. But I want to wait till it consolidates a little bit. But look at this, because we are getting an incredible price today, ladies and gentlemen, in silver. Again, I'm going to explain to you a little bit why I think this is happening. I could be wrong, but this is just my observation. Excuse me. It's all that Texas cedar, ladies and gentlemen. Silver right now, as we speak, is at 75.77. It had gone down to under 74. Ladies and gentlemen, silver was at over 100 for a sustained period. 75.77 is an incredible price for silver. And now let's go to the gold price here just to check it in real time, ladies and gentlemen. It is 8:29 p.m., March 18th. And I want to show you this price here, the gold price. Again, gold and silver stands to gain a lot when the factors that are propping up the dollar go away. So let's share this tab here. And gold, ladies and gentlemen, is at $4,842.60. 5,000 was the support. It broke that support, so I don't know how much lower gold goes. And to all of these naysayers who are saying now, why isn't gold and silver going up? You know, the Austrians are wrong. Here's, in my opinion, what's happening. You see, there's a confluence of factors. First of all, oil is obviously going up due to the obvious threats in supply of oil, the obvious diminution in the supply, because people can't get oil through the Strait of Hormuz right now. Right now, Iran and Israel are destroying infrastructure. They're destroying oil production facilities. So obviously, there's a scare in the supply. Of course, it's only less than 20% of the supply of oil, and we can get oil from Canada. We can get oil from our own reserves and from our own production materials and so forth, but people are scared, and so the price is going up, especially the short-term price. And again, I see that price rising to $150, $200 a barrel if we do not stop this, if we cannot put a timely end to this conflict. But as oil goes up, what else has to go up? The world economy is still firmly under the petrodollar. And we can explain the petrodollar in other videos, but it's basically the deal that the United States and oil-producing nations have in buying oil and then converting that into treasury bonds and so on and so forth. The basic thing that you have to know right now is that oil more or less correlates to a higher dollar. Trump was partially right when he said that higher oil prices are good for us, but by us, he means people that own the oil, perhaps. Not necessarily the people who are buying gasoline, but that's another story. So the petrodollar is going up, but what happens when, for example, Iran may demand that anyone who goes through the Strait of Hormuz has to invest or has to trade in yuan rather than dollar, perhaps, and they undercut the dollar. That's one factor that's going to push the dollar down. Now that the dollar is going up, gold and silver, as a natural consequence, go down because gold and silver are usually priced in dollars. That's an explanation as to why gold and silver is going down. Another aspect is that people are spooked out of stocks because people don't want to invest right now when things are so uncertain. So they sell stocks, especially U.S. stocks. And what do they get when they sell stocks? They get dollars. So there's more demand on dollars. That is an upward pressure on the dollar. So you have all of these upward pressures on the dollar. Precious metals like gold and silver go down, not only due to physical supply, but also due to paper gold and silver and futures and speculation on gold and silver. So that's why the dollar's going up. That's why gold and silver is going down. What's going to happen eventually is when, first of all, when all of this inflation is taken into account, all of this new money printing in order to stimulate the economy, in order to make money for the armaments that we need to purchase and so on for the continuing war, that will decrease the value of the dollar, and that will drive people into gold, silver, and precious metals. So I do see the price of gold and silver steeply recovering. I don't know when that will be, but I still think long-term gold and silver is a great investment. That's just my explanation as to what is happening with oil and what is happening with gold and silver right now. This is just from my knowledge of investing and economics. So what is the plan here? And again, I'm not an investment advisor. What am I doing? I'm going to keep buying oil. I'm going to hold the oil that I have, and I'm going to hold my gold and silver. If I see it consolidate around a certain level, I will indeed buy more gold and silver. I will also look for gold and silver mining companies to buy. So, in my humble opinion, oil is going to do very well over the next few months. Again, unless we reverse course. Gold and silver are going to recover and do very well within the next few months. I don't think holding paper money is going to benefit you at all. And I think if there's a time to make a lot of money in commodities, it is at an uncertain time of war like this. And again, while I don't agree with what's happening, I want to take advantage of it as much as I can. So that's just my 2 cents, ladies and gentlemen. If you like these videos, please do subscribe to the channel, like the videos, put the bell button on. And of course, we will be here more this week, and I will be on live in the Insomnia podcast at 2 a.m. Central on Friday night, Saturday morning. Until very soon, guys, this is Javier with The Libertarian Investor, wishing you a wonderful night.